This powerful indicator can tell you exactly when to enter and exit trades with precision. If you've been looking for a reliable buy and sell signal tool, then you don't want to miss this. In this video, I'm going to break down how this highly accurate indicator works, how to set it up, and use it in different ways to take maximum advantage from it. Let's get into it. First, let's add the indicator to our chart. I'm in TradingView, and I will be using 4-hour time frame of this market to explain the different strategies. So head over to TradingView, click on Indicators, then search for Klinger Oscillator. You need to add this one, created by Classic Scott, and once it's added, you'll see it appear below the price chart in the form of an oscillator. What makes this indicator special is that it was developed by Stephen J. Klinger, a well-known trader and technical analyst. Unlike regular oscillators, this one is built using 2 exponential moving averages, while also incorporating volume to confirm price movement, making it a highly reliable trading tool. Now, let's break it down. The Klinger oscillator consists of 2 lines, the oscillator line and the signal line. The oscillator line constantly changes color between blue and orange, while the signal line is a smooth moving average of the oscillator itself. These lines move above and below the center line, which is set at 0. If we go into the settings, you can access the settings from here. You'll notice that by default, the oscillator uses 2 exponential moving averages with periods 34 and 55, while the signal line has a look-back period of 13. The indicator also provides a full list of different types of moving averages to choose from, depending on your trading strategy. Since we're focusing on short-term momentum and confirmation signals, we'll stick with exponential moving averages as they work well in this strategy. Now, before we move forward, if you're enjoying this content, give this video a like. And if you haven't subscribed yet, hit that subscribe button so you never miss my future uploads. All right, let's move on. The first and most basic use case of this indicator is trend identification. Just like other oscillators, when the Klinger oscillator is above the center line, it indicates that the market is trending up. Conversely, when it moves below the center line, the market is trending down. But if you look closely, you'll notice that with the default settings, the oscillator moves too frequently across the center line, making it less effective for identifying trends. To fix this, we can increase the length of the moving averages, making the oscillator smoother and more accurate.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
For example, if we open the settings again and set the shorter EMA to 100 and the longer EMA to 200. Now if we have a look, the indicator now gives a much clearer picture of the trend while reducing the number of false signals. This setting helps us filter out market noise and focus on larger price movements. However, I do not recommend using the centerline crossovers as direct buy or sell signals, because during sideways markets, they can generate too many false signals. Instead, we'll use the Klinger oscillator for trend direction and combine it with another indicator to get high probability entry signals. Now, let's reset the settings back to default. And then we'll explore another way to use this indicator for trading. As I mentioned earlier, the oscillator line crosses above and below the signal line. And when these crossovers happen, they indicate momentum shifts in the market. When the oscillator line crosses above the signal line, it shows increasing upside momentum, which signals a potential buy opportunity. On the other hand, when the oscillator line crosses below the signal line, it shows increasing downside momentum, signaling a sell opportunity. However, taking every crossover signal isn't the best approach, because during pullbacks and ranging markets, you can still get false signals. To filter out bad trades, we need to add another indicator, Open the Indicators tab from here again, and add the Commodity Channel Index to our trading chart. Search for CCI in the Indicators tab and apply it. Next, let's go into the settings. It can be accessed from here. We need to change the length to 100. This will make the CCI indicator more effective for identifying longer-term trends. Now, here's how we use the Klinger oscillator and CCI together. When the CCI line is above the center line, which is this one, we only take buy signals from the Klinger oscillator. Similarly, when the CCI line is below the center line, we only take sell signals from the Klinger oscillator. This helps us avoid trading against the overall trend and significantly reduces the number of false signals. For example, in this uptrend, since the CCI is above the center line, we only focus on buy signals. As you can see, we have got pretty good buy signals here, which, if we would have opened, would have ended in a good profit. You'll also notice that the indicator automatically prints blue and orange dots when a crossover happens. The blue dots represent sell signals, while the orange dots represent buy signals. To further refine our strategy, we add an extra confirmation step. We only take a trade when the CCI line is also above its moving average. Let's look at an example. Here, we have a buy signal from the Klinger oscillator, and the CCI line is above the center line and above its moving average, confirming the bullish momentum. This is a valid trade. However, if we look at another signal, even though the CCI is above the center line, but it is still below its moving average, indicating a weakening uptrend. Because of this, we ignore the trade, and you can see that it was the correct decision since the price moved sideways instead of rallying. Another way to use this indicator is for spotting divergences. Since the Klinger oscillator is based on volume and momentum, it works extremely well for detecting hidden price reversals. For example, here, the price makes a higher high, but the oscillator makes a lower high. This is a bearish divergence, meaning that buying momentum is weakening and the probability of a trend reversal is increasing. However, not every divergence leads to an immediate reversal. To confirm that the uptrend is truly ending, we can also mark the previous low of the divergence pattern and wait for the price to break below this level. Once that happens, we can confidently enter a sell position. For bullish divergences, it's the same concept but in reverse. If the price makes a lower low, while the oscillator makes a higher low, it signals strengthening buying momentum. Again, we need price action confirmation, so we mark the previous high, and if the price breaks above it, we enter a buy position. The Klinger oscillator is an incredibly powerful tool that can be used in many trading strategies. Whether you're using it to identify trends, spot divergences, or confirm momentum shifts, it provides valuable insights into market behavior. Losing trades are always part of the process, which is why proper risk management is crucial. That's it for this video. If you have any questions, drop them in the comments below, and I'll do my best to answer. If you haven't already, hit the like button and subscribe to stay updated with my latest trading strategies. Thanks for watching, and as always, I'll see you guys in the next video.